You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And we've got a couple of interviews for you today that we gathered last week at the NACHA Smarter, Faster Payments Conference in New Orleans. We'll be having our annual kind of catch up with NACHA CEO Jane Larimer on site in New Orleans. We also had a conversation with Gita Erling, the CEO of South Africa's Payments Association, for some lessons learned from a really good panel discussion that Jane moderated on stage at NACHA Payments. Really things that we can learn from other countries who have been a little bit further ahead of us on things like faster payments and how to address things like fraud and whatnot. I thought that particularly the story in South Africa, all of them on stage being from mostly English-speaking bank markets and smaller markets than the U.S. almost by definition, had some really interesting takeaways for us. As always, I'll mention you can find out more about the Best Innovation Group by checking out our website, big-fintech.com. Also invite you to check out the CU Town Hall. We'll be having the next edition of that in just about a day or so, if you're listening to this as this podcast drops, Wednesday, May 7th, 3 p.m. Eastern, noon Pacific. If you happen to be around at that time, we'd love to have you join us live because we do look for a lively, interactive discussion. If you're a little bit too late for that, you can always find the replay of that, which is roughly an hour, and hopefully very insightful and real time as far as the types of issues that we're tackling. That's again at cutownhall.com. You do need to register in advance if you'd like to join us, but it is free to join. This week, as we've been talking about the last couple of weeks here on the Big Cast, there has been no shortage of headlines, interesting things going on in the payment space, in the fintech and credit union space, from a regulatory standpoint, a political standpoint, a mergers and acquisition standpoint. And we're going to pretty much try to tackle as many of those topics as we can and get people's perspectives on how they're reacting to them and how they think it may be impacting their day-to-day business. So we hope you can join us there. Two more really interesting stories that popped up this week that I wanted to touch on briefly. Within literally on consecutive days, Visa and MasterCard released their plans to participate in the AI world through shopping agents. The Visa version of that, they're calling it intelligent commerce. MasterCard is calling theirs a little bit more straightforward, agent pay. Let me say that properly. And there's also other entries in that whole competition as well. PayPal, OpenAI, Amazon have already been talking about doing things along similar lines. One of the quotes I saw from Visa's representative, and we'll actually post a link to the TechCrunch article, which I think covers this quite nicely. Visa says the idea is consumers can set the limits and then let Visa help manage the rest. So the idea is that you basically tell your agent what you want to do and they'll go out and make the purchase for you. I'm thinking about TV commercials I'm already seeing about people just using the AI chat function on their phone saying, hey, the one that I'm remembering specifically, go find me a nice Italian restaurant with a outdoor patio that's pet friendly. And the next thing you know, you see them there. I'm assuming the implication is that the chat GPT module or whatever the equivalent for whatever offering they're using, I think it might be Google, I can't remember. I'm assuming it makes the reservation for you. I'm not sure. Well, this obviously takes it one step further and it makes the payment for you as well. As always, I can think of some interesting twists to this, like what kind of openings does this create as far as authorization, push payment fraud, disputes later on. If that wasn't exactly what I wanted the agent to do, but it acted supposedly on my behalf, even if it didn't execute the plans exactly as I expected it to. Those are always questions that wind up having to get answered on things like this, and I'm sure we'll be working that out as time goes on, but it'll be fascinating to watch exactly how that one plays out. My other favorite story this week, and this one just kind of cracks me up because everything all comes full circle at some point. Story from our friends at Payments Dive, and we'll post a link to this one as well, about Uber increasingly offering cash acceptance for rides and Uber Eats and things like that in a variety of markets. In the US, they tend to be metropolitan areas in Texas and Florida and also Cincinnati for some reason. I'm not exactly sure why it pops up there. And it's been something that they've had in place in more underbanked population markets like Brazil for some time. They also offer it in the UK, which I find very interesting because the UK tends to get a lot of press for being a paper-free society as far as payments, that they've gone electronically. Not a lot of checks, not a lot of cash usage. Well, apparently there is, because there's a demand for it for Uber to use it for rides. This kind of reminds me, and I applaud the idea. I think, the idea is they want to make sure that the service is accessible to the non-banked and things like that. I think that makes a ton of sense. I'm also reminded of Amazon coming back and opening bookstores after the entire premise of the operation was that, bookstores are antiquated. You didn't need the brick and mortar. You didn't need the cash on the ride. I always love that, every time I get in a taxi, they want cash. If they would love for me to give them cash instead, they'll actually settle for a smaller tip if I'll give them cash instead, if I happen to have it with me, and I'm more than happy to if I do. But part of the seamless experience of Uber, part of the safety aspect of Uber, that the driver doesn't have cash, is the idea that it was a cash-free transaction. They do mention that they do not allow cash transactions, I think, between like 11 p.m. and 5 a.m. or something like that. But again, it just, to me, shows the nature of omnichannel and the fact that there's a lot of different ways that people like to transact, and we can't just assume that one size fits all. So back to Nacha Payments. 2,400 people is the number I heard in attendance. And this seems to be the season of content. I thought the content here was particularly strong, which is something I said about the GAC conference from America's Credit Unions back in March as well. Lots of very well attended and very informative sessions here at Smarter, Faster Payments, and usually more than one going on at any given time. There were obviously more going on, but even ones that attracted my attention, I had a really tough time at several time slots trying to decide between 2 or 3 options. This one that I'm referring to right now, though, actually was a main stage. There wasn't a whole lot of main stage. There were the keynote speakers. Jan Larimer did her annual kind of State of the Union. And this panel discussion with the payment heads from South Africa, Canada, the UK, and New Zealand, as I mentioned before, kind of talking about lessons learned with fraud, faster payments, things along those lines. Of those people, I reached out to Gita Erling, who is the CEO of PASA, the Payments Association of South Africa, because she had mentioned some things that I really kind of piqued my interest about how they really tackled it. So let's have a listen to that. I'm here at Nacha Payments with Gita Erling, from the Payments CEO of the Payments Association of South Africa. You were part of a great panel discussion bringing an international perspective to the different processes around, and the focus was on instant payments and moving forward there. But you made a point around the fact that South Africa has entirely gotten rid of paper checks relatively recently. So I wanted to follow up on both of those topics. First off, thanks for taking the time.
I'm very grateful to be here at Nacha and delighted to have the opportunity to chat both to this audience and to you.
So maybe just to set the stage, I think you mentioned the banking sector within South Africa. I think you said there's 5 or 6 banks that kind of lead the charge, and maybe 30 or 40 total. Is that right?
Yes, it's those sort of numbers.
And kind of an 80-20 rule that the big ones?
The usual Pareto effect.
So I think you said that checks, like a lot of different places, had been declining for some time.
So our peak check usage would have been in the 90s, where 80% of non-cash transactions would have been made through checks. We would have already started decreasing the maximum value that a check could be written from in the late 90s, once we'd put in place a real-time gross settlement system, looking to drive payments to instant settlement, high-value payments to instant settlement. And over that period, as the electronic systems became more entrenched, we watched volumes declining, and obviously as volumes decline, costs per transaction go up.
And the majority of the payments were typically business-issued checks, correct? It sounds like. Or
I don't have a good feel on the split. I suspect by the end they were mostly business-written.
So the part that was interesting to me is you mentioned that it wasn't necessarily a industry decision per se to get rid of checks, but it was one of the top banks that made the decision to go out ahead of the curve and say, okay, we are going to discontinue checks.
I think it's one of those things that its time had come. It was who was going to be brave enough to make the call and say that its time had come. It's very difficult to move coordinated as an industry to kill a payment stream, at least without a regulator telling you should be doing that. There's competition laws and other concerns. There's the optics of it. And we'd reached a point where COVID had further reduced the usage of checks.
That's right. This came up during COVID. You mentioned it was 2020, right?
Yes, it was 2020. We saw huge drop in face-to-face interactions, huge drop in anyone actually wanting to deal with paper. So we saw a big drop in checks, which created the perfect opportunity. And it coincided quite nicely with end of life around the capital infrastructure required to process checks.
And you also mentioned that you had not, to the extent that we have in the States, digitized the process. It truly still was a back office paper process as well.
It was absolutely a back office paper process. What we had largely done, though, is centralize it. So there was probably at that stage really one or two big infrastructures that were still capable of processing the checks. So everybody in the industry knew it was either exit or big capital spend on a very clearly declining payment stream that nobody wanted to support anymore. One party was brave enough to go out to market. Banking Association met with the regulator. The regulator wrote to the industry saying, we support you stopping the processing of checks. And that gave us the space to be able to literally say, as of end of December 2020, you may not write new checks. And by 31 March 2021, to stop processing checks entirely.
So again, just to kind of go back on the timing, this entire process, from the time that the first bank said no more checks to the time that you basically shuttered the processing facility, was 9 months.
Yeah, I think it was probably closer to a year. I can't find the exact date, but that announcement was made. But having said that, we were decreasing the item limits on checks from 2012, 2018 already. So the decline had been marked, and the conversations had been going on for years. It's one. That's why I say it was the right time and the right opportunity, because it wasn't a new conversation. Everyone knew the decision would have to be made at some point.
But the real key is that the one institution that got ahead of the curve did not face, the fear, I guess, would be customer frustration, somebody moving their account because they didn't really face any of that blowback. So everybody else saw that and then followed suit very quickly.
I think we were all astonished at how easily this change happened and how quickly this change happened. There was very little market lashback. I think many of the larger banks had been working with their big customers over the years because the business case for checks just no longer made sense. You still couldn't charge enough to physically process that piece of paper. That's
very interesting. So the real topic for the conversation that you had, that was kind of the sidelight that really caught my attention, but you're working toward implementing, you've had instant payments since, I believe you said 2016?
So we launched a very early instant payment system in 2006 already.
2006?
So it was built on the debit card switch in those days, and the fraud management was decentralized to each of the participants. It was used more by corporates than it was by individuals because it was a relatively expensive payment stream. What we've done in the last couple of years is we've launched a modernized ISO 20022 real-time payment system with proxy capabilities, overlay capabilities, so the ability to pay to a mobile number, for example, as opposed to having to have account details. We're bringing in QR code initiation, etc., which is very much focused around financial inclusion and the individual and consumer end of the market. And that brings a different level of fraud risk to it.
We talked about before we started recording, it's interesting that from an account ownership standpoint, South Africa is in very good shape in terms of having a banked society. But as you mentioned, many of those people basically receive their payment, government grant payment, whatever, take it out in cash and still participate, primarily conduct their lives in the cash economy. So this is really an attempt to get to that next step.
Yes. So we sit well above 80% in terms of bank account penetration. The problem is digital acceptance throughout a very big country and a very large informal sector. And that's the market we are targeting. So exactly to get to the point where the informal seller sitting on the side of the road with his pile of tomatoes can actually take a digital payment instead of having to take cash. Mm-hmm. And once we've achieved that, then we genuinely have a chance to start making inroads into cash usage in the country, as well as all the other benefits that come with this. So having watched the India and the Brazil business cases, as well as M-Pesa in Kenya, growing digital payments speeds up GDP growth, and it alleviates poverty. So there's a very strong developmental agenda from a regulator perspective underpinning this work to increase financial inclusion.
Now, I know everybody is always concerned on the instant payment side around fraud. The points that we were hearing a lot at this conference is the fraud rates, at least at this stage in instant payments, tend to be lower than the traditional standard places. But that's the approach that you're taking also, is to implement new kind of fraud data sharing, information sharing, to try to make sure people can stay ahead of the curve on fraud as well.
Well, we're relatively mature in terms of having had instant payments, but we've never centralized our fraud engines, and that's precisely what we're doing now, is looking at ACH level fraud management, using not huge amounts of data, but sophisticated, well, not huge number of data fields in the actual payment message, because we're using the same fraud engine on our legacy payment system as our new modernized payment systems, but using behavioral historic data over many years across multiple payment streams to identify patterns in transaction behavior that start to look like fraud. What's driven it has been watching what's happened elsewhere in the globe. So we've seen what's happened in those same countries we're looking to financial inclusion in terms of fraud. We've watched the UK, where the regulator has stepped in and said that the banks will take fraud losses in authorized push payment fraud, and taken a view that we will do the right thing as an industry and look at sorting out fraud ourselves before we are told to do so, or before it becomes an overarching and hugely catastrophic issue.
And I think, as you said, it's not a mandate from the government at this point. It is basically a cooperative agreement among at least the largest banks, and presumably the others follow suit.
Yeah, so all those who are participating in the new payment stream have now agreed, and this is literally in the last couple of weeks, to provide their fraud data to the ACH so that we can further train the engines that are sitting in the center, but we can also then get an accurate hold or view of what the fraud levels actually are, which we don't have at the moment because that reporting hasn't been enforced.
So it's a little bit like following NACHA rules. If you choose to participate in NACHA, it's not a law, but that's the way you're agreeing you're going to do it.
Scheme rules.
Fascinating stuff. Keith, if people want to find out more, I mean, I think that the whole South African payment system is an interesting proxy to take a look at. Do you have a website with a fair bit of information out there?
We do. So it's pasa.org.za. So PASA.org.za for South Africa.
Perfect. Gita Erling, thanks so much for taking the time.
That's a pleasure. Thank you.
So yes, Gita did say ZA, and I realized when I heard that I guess I've never visited a South African hosted website before, because I've never seen a ZA extension before. But the PASA website is, I think, worth checking out. It's pasa.org.za. And one of the things that they have out there, because one of the main things that you talked about is, from the fraud standpoint, it's debt collection fraud that seems to be particularly hot in South Africa. People claiming that they are debt collectors, looking to collect on debt, and then actually having people remit money through on a debit basis when they get into the authorized push payment situation to people who aren't actually settling your debts. And they've got something out there called Debit Check, where they provide a capability for people to kind of find out beforehand, before they make the payment, that the person that they're sending it to is a legitimate recipient. The other thing around the check piece that I've been fascinated by that, because people have been talking about the death of the check in the U.S. forever. We still have 12 billion of them. I don't see them going away anytime soon. But the way it happened, and so rapidly, in South Africa, I found very interesting. However, there's obviously a bunch of key differences between our markets. For one thing, there was never the level of reliance on checks that we have here. There are far fewer banks, so you can get kind of people on board much quicker. The big one that I kind of noticed too is they never went through the kind of Check 21 imaging process that we did in the States. Therefore, the cost of processing checks was significantly higher, and therefore the benefit of getting rid of them was significantly higher. I'm having a hard time, and it was all done from a kind of industry consortium standpoint. Can you imagine the Fed shutting down their clearing operations for checks? I have a really hard time doing that. Maybe the clearinghouse. I mean, they're the ones that have the biggest banks. And if you did wind up with a scenario where somebody got in front of the game and said, guess what? We're not doing checks anymore. Maybe the other big guys would follow. But anybody who didn't, I would think the Fed would still be a backstop. This is obviously pure speculation at this point. But I did find it interesting. Obviously, Smarter, Faster Payments is an electronic payments conference. The Federal Reserve Financial Services are there. They actually hosted a dessert reception the first night. and made the mention. The Fed still clears, I think it's 3 to 4 billion checks each year. They're processing and clearing those on behalf of the banks around the country. But when they were up on stage, I mean, they made that comment and then said, let's do something about that. I thought it was interesting. I'm not used to hearing people, again, almost saying, hey, we're the ones that do this work for you. Let's not do as much of it. So I don't know. We may be getting to a turning point. It seems like I heard a little bit more of a drumbeat around checks. But as I say, long way to go, especially on the business side, as far as writing those. Let's jump into our conversation. As I said, we've been doing this for several years now with Jane Larimer, the CEO of NACHA. And she had some great insights, both the most recent data they've put out as far as their volumes, as well as just the overall process of kind of the evolution and the overall trajectory of the various types of payments that NACHA supports. Here at Smarter, Faster Payments with Jane Larimer, the CEO and president of NACHA. Got to be happy with the way this is at. I'm not going to say we're wrapping up yet. We're toward the end of day 3, but we've got another couple sessions today and Wednesday morning as well. But great sessions so far.
Well, thank you, Glenn. It's a pleasure to be with you. I think this is our maybe fourth or fifth
year.
Our discussion. Yeah, it's great. And we've had a fabulous conference. Great sessions, a lot of energy. It's been really positive.
I've really noticed the number of questions, the number of people in the rooms at the sessions, and we've talked before about pay by bank and open banking, and I mean those topics are really definitely hot. One of the things I want to touch on is both the year end and the Q1 numbers are out now for ACH volumes, and they continue to look great. I think some people, maybe I'm overstating this, but some people still associate ACH with direct deposit, which was your original use case. But looking at the numbers, that's roughly a quarter of your volume. It's actually internet transactions that make up the it's not the majority, but the plurality of your transactions. So you've got, just this propagation of use cases, which is the reason why we continue to grow, right?
Absolutely. So as we think about 2024 ACH network volume, 33.6 billion transactions at over $86 trillion. So, a vast number of transactions, a lot of dollars. Let's see, almost 11 billion of those payments were web debit transactions. So
e-commerce.
E-commerce. So, well, let me put it differently. Bill payment, most primarily.
Good point.
Bill payment is huge. So one of the things is you just mentioned direct deposit. Direct deposit is kind of our bread and butter, the classic ACH use case. Web debits, bill payment. So as you think about the ACH network, it's both a credit push and a debit pull. And I would say the two sides of the coin, it's going to be direct deposit on the push and then bill payment on the pull side. And those are big use cases on the consumer side.
And then for direct deposit, we're at ubiquity. There's not a whole lot of growth to be had because the vast majority of people who are capable of being paid direct deposit, that's how it's being done already.
Yeah,
you're growing with the market.
That's absolutely the penetration of direct deposit. It is. I like to think of it as old faithful. People want to be paid. What more convenient is there than you're paid? You don't have to do anything. It shows up in your bank account every day or on payday. So we do have over 90%, 95%. Yeah. Penetration in direct deposit in American households. And then think about federal government payments, so your Social Security and your IRS tax refunds, you have pension payments, all of that is through direct deposit.
Yeah, we talked, I think, beforehand, it was 99% on Social Security.
Social Security, yes. It's huge. So maybe it's not 100%, but we're closing in on it for sure.
So the other piece that I think gets interesting then is same-day ACH, which is a newer product and is growing by remarkable numbers and doesn't seem to be cannibalizing, which is one of the things I find interesting too. You're growing at 45%, I think, last year, if I'm not mistaken.
Yeah, yes.
And that's not slowing down the other side of the equation either.
No, absolutely. So the thing that I think is really interesting is when you think about same day, you do have this really steep growth curve that we love to see. It's still a small part of our overall pie, though. So as I was talking about 2024 overall network volume, we were at 33 billion payments. We met the 1 billion milestone. 1 billion transactions last year were same-day ACH.
I think I saw somebody else doing a presentation said it's roughly 4% of your total volume.
Yeah, so it's still a very small part, and when you have smaller numbers, that growth curve can
Exactly.
you can really have that upward trajectory.
And I know you're proud of the fact that you're being used more and more for B2B volumes as well.
Absolutely. So, we have been looking at B2B volume and trying to figure out how do you move from check to ACH on the B2B side. We saw big growth on ACH through the pandemic, because folks weren't they didn't want to run through the stores. They didn't want to get dual control with signatures. And we did see growth there, and we're still seeing super strong growth at over 11% for our B2B volume last year. So it's heartening that we're seeing that. And I think once entities start using the ACH, then they see other use cases use it. And it's the same thing we see on same-day ACH. They might have they need to say they've had an exception problem. They need to get a file in, and they use same-day ACH once, and then they start thinking about what other use cases can I use. So then you see payments moving through the ACH.
Do you sense that B2B has been kind of a driver on that too? My sense, maybe that's
Absolutely.
just my perception, that B2B is one of the big use cases that's driving the same day side.
Yeah, and I think my 11% is, that was a big, strong growth driver on same day as well. So we're seeing it on traditional ACH, and then we're seeing it more probably accurately at 11% on same day ACH. So I think that's somewhere where we've really been focused on the B2B side.
Yeah, and that's another one of those where at the same time and there's been a lot of content here about instant payments around RTP and FedNow. Those are growing at those astronomical rates, again, off a small base, but they're all growing at the same time. Just went to a session about how all types of instant payments are still necessary to make the world go round.
Yeah, I think that's exactly right, Glenn. We've talked about this before, that from our perspective, and when you think about faster payments, it's not either or, it's both and, which is there are great use cases for same-day ACH. It's not just the expedited payroll, but we're seeing on the B2B side, we're seeing on insurance payouts, we're seeing in the gig economy, we're seeing a lot of different use cases for same-day ACH, and then we're also seeing there's cases for instant payments as well. So really, I think it's, as we look to the future, it's all of these faster payment types, depending on the attributes that the end user, that the payer wants to make. How do I want to make the payment? And again, same-day ACH is credit and debit. Yep. It's not just a credit payment.
Good point. So unlike the instant payments from the Fed and RTP, which are purely credit push, irreversible.
Yes, that's exactly right. So you have your credit push one payment, and it's irrevocable, and on our side it's a batch payment, and it is you can reverse it, and credits and debits. So there's just different functionality.
I really enjoyed yesterday you put together a session on the main stage and got together with some of the global folks who are looking at very similar ACH type solutions in New Zealand, South Africa, Canada, the UK. Really great conversation. And again, kind of talking about the experience, particularly on instant payments and fraud, was kind of the focus. But we got into a lot of other conversations. I've followed up with the woman from South Africa about checks as well. But lessons learned. You get a sense. There's obviously plenty that we can, we're not the first ones to the market with the faster payments, so we can really learn from what other people have seen before.
Absolutely. One of the things that I love about payments are meeting new people, learning about different experiences, and working with my colleagues across the globe. What we realize is, in this context, fraud on all payments it's a global issue. We always think about here in the United States, but they've been working on different aspects of this for longer. So the UK was up with faster payments, their instant payment product back in 2008.
I think at South Africa, so they were doing it in 2006.
Exactly. Yeah. So they have so they've seen some of these things. So learning from what they've done on the faster payments rails, but also whether it's with check, whether it's with their batch systems. When you look at fraud, it's across all payment types. So how can we learn from other geographies? How can we learn from other payment rails? How do we get those lessons learned? And one of the big things, Glenn, was the fact that this shouldn't be a competitive sport.
Exactly. That was one of my key takeaways
Yes.
from that session.
Risk should be somewhere where we're collaborating together and we're all working to tackle it. And it's everybody has a role to play within that. And it shouldn't be part of the competitive landscape. It should be part of the collaborative landscape.
And the other thing I thought was interesting on that one, too, is the idea, we know in the States it's very hard to get a mandate for anything, particularly when you're talking about 9,000 FIs. But it seems like it's worked quite well in other places where, just like you do through NACHA in the rulemaking body, everybody kind of agrees this is going to be good. If we're going to sign on to play on this field, we're going to abide by these rules. And there's been more conversation, at least in the other countries, about sharing more information to fight fraud more collaboratively.
Yes, data sharing is one of the toughest nuts to crack, I think. And I think part of that is because of data privacy laws. And how do we, what kind of information can we share? How do we make sure we've secured the information? And watching what they're doing, the UK's pilot, where they're having a pilot data sharing, effort, that is fascinating to me. And I'm hoping that maybe we can be doing something more here because that kind of data sharing, I think, is critical in trying to fight the fraud.
I hope so. That seems like it's a natural that we have to do in some fashion. One more thing I wanted to touch on. I know you released sometime recently that for 2024, your top 50 originating FIs and top 50 receiving FIs, which I find interesting because, on the surface, my first inclination was, well, they're going to look an awful lot like my typical league table of by asset size or something like that. It doesn't quite work out that way. How do you think about the concentration on each side? Is that something you track strategically? I mean, I know ubiquity is important, but everyone accepts and sends ACHs virtually, across the board. But is that something that you look at on a regular basis? So
it's something that we look at. As long as I've been at NACHA, there has been because there are so many FIs that are receiving banks. There's always been more concentration on the origination side than there has been on the receiving side. So the number of DDAs and the way we watch that.
And that's to some extent, I'm thinking because of the nature of their business, corporate payments, corporate banks are going to actually be originating on behalf of those customers.
Yes, absolutely. So on the origination side, origination of ACH often is a scale. It's scale.
It's a scale game.
It's definitely a scale game. But you do have some FIs that are punching above their weight in origination, that they've really put a lot of effort into creating an origination program where they are originating, I think, more than what you'd think given their asset size. Yeah, absolutely. And so I think that's really interesting because they've decided this is somewhere where they're going to differentiate themselves, and they've gotten into it and they've done the work that they need to do to manage the risk of ACH origination. And then on the receipt side, what you see is, how many deposit accounts, where are they? And then it's why on the ACH network and with the NACHA rules, we want to make sure we have the voice of both the receipt side and the origination side. Because what you want with rulemaking is to make sure that we know that all the RDFIs, the receiving banks and credit unions, they're the ones who are have to put the catcher's mitt up and receive these transactions. So you want to make sure you have both sides of the transactions having a voice in rulemaking, because to your point, once something goes live, everybody has to do it.
Yep.
And so that's one of our core kind of principles as we look at rulemaking, is having the voice, not just of the largest originating players, but also of the receiving financial institutions or the smaller originating financial institutions that are what I think was like the voice of the credit unions and the community banks.
Well, and we were talking about this before. I was, being a credit union geek, I took a look at the receiving side, and there are, I believe, 6, 7, or 8 credit unions on the top 50 originator list, which I would never have really guessed, because I think if you looked at the top 50 FIs in the country, there's 1, maybe 2. And we were just speculating what that says about the member base, and you gave your own example as a credit union member yourself.
Yeah, I believe that credit unions, there are people who have credit union accounts and credit unions who have these memberships, large memberships, who, like, I've had my credit union account for over 20 years, and I faithfully sock a little bit of money away from it. So I do think that on the receiving base, it's deposit accounts. It's people putting in direct deposits and using. That's why I think that when you look at the top 50 receiving list, you're going to see credit unions maybe looking like punching above their weight with receivers.
And you kind of reminded me of a feature that really wasn't available back when I was doing the direct deposit piece and taking things in, where it was like I'm thinking, okay, that's my monthly payroll, that's my money for rent, that's my money for groceries and things like that. But now you can actually carve that out into multiple little pieces. So this may be the rainy day fund.
Absolutely.
Something like that.
Split deposit is a great function. And we, in fact, we do work with America Saves because we think it's a great thing for people to be socking a little bit of money away every couple weeks with your paycheck, because that way, when something happens, unforeseen, something not so good, you have that money there.
And hopefully a lot more than that $400 apocryphal number that we always have out
yes,
there.
Exactly.
But, yeah. Wonderful. Jane Larimer, thanks so much for taking the time. If people want to find out more, I know you've got a great, robust website. The Q1 numbers are still pretty darn fresh, but they're out there freely available,
The
right?
Q1 numbers are just up. We put up our infographic just a few weeks ago, and it is at nacha.org.
Wonderful. Jane, thanks so much.
Thank you.
Great conference.
Well, thank you.
If you visit nacha.org, they've got some good one-page infographics on the volumes, both from year-end 2024 as well as Q1 2025. I'm also going to post a link to the blog post I did, I think it was the very end of February, if I'm not mistaken, basically summarizing the 2024 data and the strong growth of all types of instant and faster payments, same-day ACH, RTP, FedNow. The Q1 stuff, as I mentioned, is out there from all three of them. It doesn't really change the story that much. They continue to really hum along and grow nicely. Having said that, there was a whole bunch of other stuff that popped up at the conference I really wanted to dive into, pay by bank being one of it. That was a big topic. Instant payments more broadly and how they the use cases that may be coming up for that. I will say that I'm a little uncomfortable the extent to which the most common use case that keeps getting trotted out for instant payments is sports gaming, online gaming, because you want to have surety of funds. You can't. And the state of Illinois became, I forget how many states have done this now, have formally prohibited the use of credit cards for online gaming. And a lot of times that's not accepted in many cases anyway, but they've made that official now in the state of Illinois. They are not alone. Let's get more into those topics next week. There's more to come on Nacha and a couple other interviews that we got in the works of some of the other great speakers that we saw there. So we'll get into a few more of those details as time permits next week. Again, I always encourage you to check out the show notes. We've got links to those stories about Uber and about agentic AI and Nacha Payments and PASA and all that good stuff. Big-fintech.com. Go to the media tab. Check out the rest of the website while you're there. Find out all the other great stuff the Best Innovation Group has going on. Follow us on LinkedIn, Best Innovation Group, or my firm, 154 Advisors, Glenn Sarvati. You'll find me out there on LinkedIn or on Blue Sky. You'll find our Grand Poobah John Best at JB FinTech. You can also find all the past episodes of the podcast right there on the website or wherever you get your podcasts. We're on Spotify, we're on Apple Music, we're on Amazon, and I'm very gratified by how many people have been stopping me. And I find that people are using all those avenues to get to us, and I always appreciate it. We'll be back with more content next Tuesday. As always, thanks so much for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.